Traders, it's a unique and exciting trading environment, and as always, I'm looking very forward to sharing my thoughts and trading plans with all of you. So, just to go over a few critical adjustments and general market thoughts. Last week was a week for the books, regarding the market's overall volatility, just the sheer range that we saw, the price action, and especially in several leading mega cap stocks and ETFs. Regarding mindset and adjustments, it remains a trading environment, in my opinion, versus a swing environment. And, of course, sure, the bounce off the panic lows on Monday worked extremely well. But, several 1 to 2% declines off of the higher highs within the uptrend down to the higher lows, 1 to 2% moves along the way, that makes swing trading increasingly tricky in the environment compared to just intraday momentum trading. So I continue to have my attention and really prioritize my focus there. I'm going to be closely monitoring the overall market, of course, SPY and Qs this week as we come into a potential resistance band. For SPY, that area of potential resistance where we could see the market make a lower high and downtrend continuation is really towards 537 up towards 540 within this zone, the potential overhead supply and resistance for the overall market. So I'd like to see how we act there. For Qs, for tech, similar story, but that's a lot closer for Qs towards its 100-day. And the Qs tech, it's led the way on the upside before this downtrend. It's led the way on the downside, and on this bounce, once again, it's led the way firmly on the upside. It's coming into its 100-day around 456. So near 456, and this potential band of supply and resistance gets me interested as we edge closer to that as a potential zone of resistance. I'm going to be paying close attention to market internals and price action for signs of a possible turning point and potentially skewed risk reward favoring bears for momentum shorts. And especially, really wanted to get the point across there. Like I said, focusing on internals, focusing on leading lagging sectors, relative strength and weakness, as well as many other factors and variables, but really looking for critical inflection points and turning points that offer skewed risk reward, which is for me what it's all about, and then riding momentum versus looking for multi-day holds. Now, if that scenario begins to form, several avenues exist to express it. For example, not only could I be involved in Qs and SPY, leading market ETFs, but I also might consider identifying relatively weak names for momentum trades on the short side. And there are many, but one such go-to name for me, based on its setup from a technical perspective, would be ARK. ARKs, it's an interesting option. It's an interesting avenue to express that idea because, given the bounce into significant resistance into 42, not only in the short term might it act as a resistance zone, but on a higher time frame on the daily, that was support broken, now turning into resistance. So coming into this zone, if we experience weakness in the market, we have a very well-defined area to risk against in ARK. And so that might be a nice starting point to express that idea, or just another avenue to express that idea that might offer some well-defined risk and potentially skewed risk reward. If we turn lower in the really near term in the week, in the beginning of the week, with risk versus Friday's high. Now, the opposite might happen as well, of course, and that is to say the market might just digest the recent week's action with volatility subsiding as well, especially into the last 3 days of last week, volatility subsiding immensely, and we might have a slight pullback in SPY in the Qs. We might have a higher low and really use time to correct the current action and digest the move. Now, if that occurs, I would look for beaten down names, trading at crucial inflection points that offer really the same, but on the flip side, offer the potential for quick directional moves if internals in the overall market, if internals begin to improve. So for example, what do I mean by that, and what I would be looking for in that scenario? Microsoft is one that's interesting to me. Microsoft is contracting right now in a flag near the resistance of its steep downtrend, near this 410 zone, which would definitely trigger this downtrend break and potential upside. And there's a potential for momentum longs if that scenario plays out, if the market stabilizes and we find some footing higher. So Microsoft, that bounce could grow legs, and I'd be interested in a clean push and breakout above 410 for a momentum trade, entry above 410. And in that case, I'd be having a stop at the low of day, scaling out 5-minute time frames on higher highs, extended higher highs trailing on higher lows. And similar to that, in that scenario, to double down on that, another idea which is interesting would be Tesla. And Tesla's interesting because it's actually consolidating between flattening 200 and 100-day SMA. But again, such a consolidation and contracting range in an inside day on Friday with declining volume offers the potential for skewed risk reward when the stock picks a direction and breaks out, and ideally, the same direction as the overall market if we get continuation in either direction. Tesla could be a good one from a risk-reward perspective for a reactive position. And a lot of my ideas coming into this week are reactive versus in prior weeks from a more swing mindset, looking for overall trend and consolidation breakouts within an overall high time frame trend for 2 to 3 day directional holds. This is a lot more of a reactive tape, more of an intraday momentum mindset. Now, some additional ideas that are uncorrelated to the overall market. We have HUGE. Let's go to a VWAP and focus more on intraday here. So we have huge HUGE from Friday, penny stock, small cap, and really it was an awesome mover and fantastic volume traded, and a mover in terms of its percentage, right, that it moved. Obviously, in terms of cents and price, some might not find it too impressive, but in terms of the percent that it did, it was quite impressive. Now I'll just have some alerts set in something like this. 1 day wonder, multi-day VWAP will develop around 25 cents. For me, I see significant overhead and supply around 30 cents, where we sort of had the right shoulder of this head and shoulders that formed intraday. So if we get a push over 2-day VWAP, spikes into 30 cents and fails, I'd be considering a short in that position against the high of that move where it failed follow through, and looking for a move back down towards 20 cents or the teens. And lastly, Beyond, which really was a gift on Friday, Beyond off of unusual options activity that hit midday. You saw price action react and some excitement and some FOMO. But once the price turned at 9, it reminded me so much of Chewy, whenever that was, a month ago, off of the whole meme stock saga, and with the meme that was posted by Roaring Kitty of a dog or a puppy, and people jumped to the conclusion that he was now involved in Chewy. This reminded me so much of that price action, and it provided a brilliant short opportunity, and it was fantastic to see so many traders on the desk do well in that as well. Now, it's a long shot, but I'll have alerts set for 7+. For any secondary move, maybe off of options activity, maybe off of excitement of FOMO rumors, who knows, but I'll have alerts set in the name, ideally 7+, 750s to 8, and then looking for reactive trades there as well. So that's it. That's what I have on my watch list for the week. As always, throughout the day, throughout the week, new names, new ideas, new opportunities pop up, which will take my attention, should I see fit. However, for now, that's what I have, and so please drop in the comments what you're watching for this week, what has you excited, and what are your exact plans for entry, plans for exit, what are you looking for confirmation. So drop those tickets and plans in the comments, and I'll see you all next week. Good luck for the week.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.